Welcome back, America. I'm Hugh Hewitt. We have a sponsor, KeyCity Capital, and I love this sponsor, and I'm obliged to tell you, not only they're a sponsor, I'm an investor in KeyCity Capital, and we love the investment, but I'm an accredited investor. If you're an accredited investor and you like what you're about to hear from Ty Lasater, call, get the prospectus and study it. It's not the fund I'm in, but it'll be a great fund. Ty, good morning. How are you?
Good morning, Hugh. I'm doing great. Thank you for having me. It's always a pleasure to be on your show.
Well, I wanted to start with the Wall Street Journal story from 5 days ago. Home sales fell in April for the second straight month as high mortgage rates and near-record home prices continue to stall the market during the prime selling season. It was a blow to the market, Ty. I imagine it was good news for KeyCity Capital investors.
It's really good news for us. And I think I just saw Goldman Sachs issued, I think they pulled in $21 billion in capital for the real estate sector. And they're doing very similar to what we're doing. The thing is Goldman Sachs average investor for that fund is $70 million. We're focused on an effort. I'm sorry.
I said, oops, that's not my audience. My audience can give me 100 grand or 200 grand, but they're not going to come up with 70 million.
Yeah. Not many people's audience, but what we're doing is we're focusing on a product that allows the average investor, the high net worth, the accredited investor to step in and take advantage of that. We're seeing insurance, we're seeing everything skyrocket right now. We've got insurance companies that are pulling out of states for home insurance. It is absolutely making the ability to afford to buy a home unaffordable. And we're trying to focus on that market. We've got a huge demand for our product. We're coming in, we're building new properties, we're building developments, we're buying existing and renovating, and we're putting product on the marketplace that allows somebody to call a home for nearly $1,000 less than what they would otherwise have to purchase a home for. And our investors partake in that by coming in and investing alongside with us. They're taking advantage of cash flow, of market appreciation, of tax advantages by owning real estate while not having to actively participate and deal with tenants and deal with toilets and deal with air conditioners breaking and things like that.
If you're interested in this, you go to keycitycapital.com/Hugh and you can order up the prospectus. Which fund are you on right now, Ty, and how long will it be open for?
Yeah, we've just opened up real estate fund number 12. We're already 75% prescribed for that fund. So I suspect in the coming month, we'll be closing that fund down. That fund has already made some really, really good asset acquisitions. And so any investors coming in now will already get to participate in some of the assets that we've already purchased. Some great multifamily properties here in the Dallas market where we are. We've by and large not been focused on the Dallas market for the last 5 or 6 years until of recent. And that is because we've seen over 22 Fortune 1000 companies relocate to the Dallas market. So the Dallas market is growing quickly. It's one of the top fastest growing markets in the US right now. And there is not enough product on the marketplace to sustain the amount of movement coming from other states into Texas and specifically Dallas right now. So we're taking advantage of that. And so are our investors.
Ty, I want to ask you about millennials. Have they given up on buying houses? Are they committed to being lifelong renters? Because I know more and more young people who say, I'm going to be mobile my whole life. I'm not going to buy a home. Is that who's moving into these apartments?
Absolutely. I actually read an article this morning that was many baby boomers are incentivizing their children to buy homes by offering them the opportunity for the parent to sign on the debt or the parent to give them the down payment assistance. And the kids are not wanting to do that. They're wanting the flexibility of rent. They're taking jobs in one location, and after a couple of years, they want to go to another location. They want to see different markets. They want that flexibility. And more importantly, they don't want to be tied down to a mortgage for 30 years. That is something that we're seeing that is becoming something of the past. And so our product focuses directly on that target demographic.
So last question, Ty. People can get the prospectus for fund number 12. How long does the average fund stay open? When does it close out and people either cash out or reinvest with a new fund?
Yeah, we typically target around 5 years. That is, typically dependent upon the market. Right now, we're not looking at a seller's market. You don't see a bunch of product moving on the marketplace right now. So we have a fund that opened 4 years ago that was nearing ready for us to start exiting. We've decided to hold that through this year. So we'll probably end up exiting that fund at year 6. I've also had funds that we bought right at the right time in the marketplace. We implemented our business strategy. We got done within a 2.5 to 3 year period. We pulled the plug and we exited at year 3. So we target 5 years. That could prolong or it could be a little bit quicker depending on the marketplace when we're getting ready to exit those assets once we've already established and hit our business targets.
So I tell everyone out there, if you want to be involved in real estate investing and you don't want to have the headache of being the landlord and you're an accredited investor, get the prospectus, keycitycapital.com/Hugh. I have to repeat, I'm an investor, but you can't be in my fund. They're a sponsor, but I'd have them on anyway because I think everybody loves to know about housing and apartments and to think through this. Ty Lasater, always good to talk to you, my friend. Have a great day in Texas. Remind everyone over at Hugh Hewitt